Hi friends, very good morning all of you. Welcome back to CAP classes. We are looking at problem number 2, that is illustration 2 in partnership second unit. This unit contains amalgamation of partnership firms, sale of partnership firm into a company, sale of partnership firm or conversion of partnership firm into a company. So let us look at problem number 2, that is illustration 2 in page number 7 of our material. So this problem is a problem on sale of one partnership firm to a new buyer. So let us look at this basic model, easy model. On 31st March 2012, Sri Raman acquires on payment of 80,000 the business of Messrs. Gupta and Singh, taking over at book value the following assets and liabilities: debtors 35,000, furniture 3,000, stock 46,000, creditors 10,000. So up to this you read. I want some answer in 10 seconds. Is there any goodwill or capital reserve? Is there any goodwill or capital reserve? Fadafat, take calculator. What is the purchase consideration? Purchase consideration is 80,000. What is the net assets? Debtors 35 plus furniture 3 plus stock 46 minus creditors 10. So net assets of the firm is 74. To acquire 74 net assets, I paid 80. That means I have paid a goodwill of 6,000, isn't it? So there is a goodwill of 6,000. Then there was no change between 1st Jan 2012 and 31st March 2012 in the value of the assets and liabilities not taken over. Value of the assets and liabilities not taken over. Now look here. After this, they have given balance sheet as on 31st December 2011. That means 31st December 2011 means for 2012, this is the opening balance sheet. Now, balance sheet is given on 1/1/2012. Typically nothing but 31st December 2011. That is 1/1/2012. But takeover of the business happened after 3 months. Business takeover happened on 31st March 2012. Balance sheet is given as on 31st December 2011. So for this 3 months, whatever the profit is, we need to calculate. How can we calculate profit for this 3 months? Simple. We will calculate net assets as on 1/1/2012. We'll calculate net assets as on 31/3/2012. The increase in the net assets is nothing but the profit. So imagine net assets on 1st Jan is 100 rupees. Net assets on 31st March is 120 rupees. The 20 rupees is profit for these 3 months. That's all. So like that we calculate profit for the 3 months. Okay, let us continue. The same set of books has been continued after the acquisition and no entries of the acquisition have been passed except for the payment of 80,000 made by Sri Raman. So this guy paid 80,000, no? So he recorded business purchase entry. But he did not pass any journal entry for acquisition. When you pass entry for acquisition, what happens? You will cancel all the assets and liabilities, isn't it? Then you will recognize goodwill. That means this guy did not recognize goodwill. This guy did not cancel the assets and liabilities. That we will have to do it now. Something like, you can say rectification or something like they omitted something which, we are doing it now. From the following balance sheet and trial balance, prepare business purchase account 1, P&L account for the year ended 31st December 2012 2, balance sheet as on that date 3. These 3 things we need to do. Balance sheet as at December 2011. Okay, that means opening balance sheet for the current year. Capital accounts Sri Gupta 30,000, Singh 20,000, total 50,000, bank loan 18,000, creditors 12,000, furniture 3,000, investment 5,000, insurance policy 2,000, stock 40,000, debtors 30,000. So total 80,000. So on 31st December, the trial balance is, so this is trial balance for the current year. Stock 40,000. What is the stock opening balance? Stock is nothing but our opening balance. Okay. So they have given opening balance of opening stock 40,000. Then furniture 3,000, investment 5,000, insurance policy 2,000, business purchase account 80,000. Now when you are recording this business purchase 80,000, you will have to cancel this investment, insurance, all these things, because you have not taken over. What you have taken over is only this debtors, furniture, stock, creditors. All the remaining assets and liabilities will have to write off. Okay. Then So business purchase account 80,000, bank loan 18,000, this also we'll have to cancel. Then capital, Gupta 30,000, we have to cancel this. Singh capital 20,000, we have to cancel this. Raman capital 30,000, this will be proprietor capital now because he is proprietor now. So it will be proprietor capital now. We will add current year profit to this 30,000. Then bank 3,000, debtors 48,000, creditors 15,000, purchases 3,20,000, expenses 12,000, sales 4 lakhs. So total 5,13,000, 5,30,000 for 13,000 and closing stock 50,000 he has given. Simple problem. Okay, shall we start? Once again read the problem. All of you once again read the problem, we'll start doing it. Okay, problem number 2. Okay, put the heading statement showing working note 1. Working note 1, statement showing calculation of profit for working note 1. Profit for the 3 months between 1/1/2012 and 31/3/2012. Okay, how do we calculate? If you want, you can write down notes. The difference between, write down the difference between opening net assets and closing net assets constitute the profit or loss for the period. The difference between opening net assets and closing net assets constitute the profit or loss for the period. Okay, profit or loss for the period. Particulars: net assets on 31/12/2011, that means 1st Jan of the next year, and net assets on 31/3/2012. Isn't it? Can you do it yourself? Try to do it. So what are all the assets? We don't need to take all the assets. If we take that 4 items, whatever given in the problem, at the beginning of the problem they have given, no? This 4 if you take, it is enough. Why? Because they said these are the assets and liabilities taken over. Of the assets and liabilities not taken over, okay, they said everything remained same. Read this para. There was no change. That means you don't need to consider all the assets and liabilities. Only if you consider these 4 items, it is enough. Okay, shall we do it? Debtors, furniture, stock, creditors. Debtors, furniture, stock, less creditors. Okay, they said on the date of acquisition, that means 31st March, debtors 35,000, furniture 3,000, stock also they have given how much? 46,000. Creditors we have to subtract because it is a liability, no? Minus 10,000. And what are the openings? Openings are given in the balance sheet. Okay, furniture same 3,000. Then debtors in the balance sheet 30,000. They have shown debtors 30, stock 40. Debtors 30, stock 40,000. Less creditors, opening creditors 12,000. So net assets. Net assets is nothing but total assets minus outside liabilities. So it is 61. It is 74. So opening net asset 61,000, closing net asset 74,000. So profit for the period of 3 months is equal to 74,000 minus 61,000. That is equal to 13,000. 13,000 pre-acquisition profit. Pre-acquisition profit from that business purchase, we have to adjust this. You do amalgamation, consolidation of companies or this, or accounting standard 13. Basically, principles of accounting remain same, okay? You are not doing any great deviation in the accounting treatments. So this is your working note 1. Now write down working note 2. Calculation of goodwill. Okay? So here we write A. Business purchase, that is in brackets write down purchase consideration. How much we have paid? 80,000 given in the question. B. Net assets taken over as per working note 1. In working note 1 clearly you can see on the date of acquisition 74,000 is the net assets. Therefore C. Goodwill is equal to A minus B, that comes to 6,000. Isn't it simple working note? Goodwill 6,000. Now we'll prepare business purchase account. Okay, so copy working note 1 and working note 2. Do it fast, don't take much time, simple calculations. Shall we prepare business purchase account? Business purchase account. Particulars, rupees. Particulars, rupees. Okay, prepare a ledger account. Particulars, even columns. Then rupees, even columns. Okay, so in the trial balance is given. What is business purchase balance given in the trial balance? They have given trial balance 80,000. Okay, debit side 80,000. So to balance brought down 80,000. So on the day, look at the trial balance, or you can go to the balance sheet. Whatever the items you have not taken are to be cancelled. So this Gupta's capital, it is to be cancelled. That is showing credit balance even as per your trial balance also. 30,000 credit balance Gupta's account is showing. So this trial balance is prepared on 31st December 2012. But by that date, Gupta and Singh are no more there. So they have quit 9 months back. But you have not done accounting properly. Okay, so we have to cancel this 30,000 and 20,000. Then similarly, bank loan I have not taken, that I have to cancel, because when I am not taking bank loan, they might have settled this bank loan outside my business. So this old partners, they might have settled that 18,000. That is none of my business. I have not taken over that. But still the same set of books are continued. Books of account are continued. So all these numbers have to be deleted. All these numbers are to be deleted. So stock I have taken, furniture I have taken, investments I have not taken, insurance policy I have not taken. So cancel them. They are showing debit balances. So you need to credit them. Business purchase account debit to investment account 5,000 to insurance policy 2,000. Investment 5,000. Insurance 2,000. So what are the credits to be cancelled? Gupta's capital 30,000. Okay, that what is the other guy's capital? Singh capital. By Singh's capital. 20,000. Then you need to cancel by bank loan also, because you have not taken it. It is not your responsibility. Cancel that from your books. Any other thing to be cancelled? No. Then shall we balance this? No. Do you remember? We need to do one more thing also. So 87 minus 68,000. What is this difference? 6,000 is goodwill. Remaining here, this 13,000 is there, no? What is that 13,000? Pre-acquisition profit. That should be adjusted here by profit and loss account. Adjustment to profit and loss account. How much? 13,000. So you can write down in brackets pre-acquisition profit. So for the 3 months, I acquired it on 1st April or 31st March, you can say. Jan, Feb, March, this 3 months profit is not my profit. No, so I have to adjust it here. Okay, 13,000. Then by goodwill, calculated in working note 2, my dear friends, 6,000. Yeah, our business purchase account is made. That's all. Now you need to prepare P&L balance sheet. LKG problem. Look at the trial balance. You need to prepare P&L balance sheet. That's all. Okay, are you done up to this? Copy this, complete. Okay, so next P&L account. Of Mr. Raman for the year ending 2012. Okay, P&L account of Mr. Raman. Okay, now go back to your trial balance. So what is the stock given in the trial balance? Opening stock 40,000, right? So we'll write 2 opening stock 40,000. Then what other things are there? Furniture investment insurance policy, business purchase, bank loan, capitals, bank account 3,000 will not come, debtors will not come, creditors will not come. Purchases 3,20,000, 2 purchases. 11th class problem it is. Then expenses 12,000, 2 expenses. 12,000. Then sales 4 lakhs. Credit side sales 4 lakhs. Then closing stock they have given 50,000. Okay, isn't it? So add this side 4,50,000. Take it to this side 3,72,000. Okay, then calculate what is the difference. 4,50,000 minus 3,72,000. So total profit is 78,000. But in this first 3 months you earned 13,000. No, that is not your profit, my dear Mr. Raman. That is pre-acquisition profit. So to business purchase, pre-acquisition profit 13,000. Now out of 78,000 of current year profit, first 3 months 13,000 if you eliminate, out of 78, 13 if you eliminate, 65 is your profit, Mr. Raman. Enjoy this. To net profit to be sent to Raman capital account. Sole trader, no? 65,000. That's all. You understand this? So to net profit to be transferred to Raman's capital account. Basic problem. So now we need to prepare balance sheet. Balance sheet of Mr. Raman for the year ending. No, not for the year ending. As on 31/3. No, not 31/3. 31/12/2012. Then we'll have to write liabilities rupees, assets rupees. Okay, now go back to the trial balance. Pick the numbers from here. Go back to the trial balance, pick the numbers from here. So, stock, this is opening stock, closing stock will come, opening stock will not come. Furniture 3000, write down. Asset side, furniture 3000. They have not spoken anything about depreciation, so we are also not bothered about it. Furniture we have written. Then investment will not come, insurance policy will not come, business purchase will not come, bank loan will not come, out of capital Gupta will not come, Singh will not come, Raman capital 30,000. Here Raman's capital we'll write in the inner column 30,000. Add net profit. How much it is? 65,000. So total outer column 95,000, isn't it? Then bank 3,000 it will come, bank 3,000, furniture 3,000, bank 3,000. Then bank is over, debtors 48,000, debtors 48,000. Then creditors 15,000 also will come this side, 15,000. I left one line blank. Let me see if at all something is there, we'll write it there. Expenses हो गया, sales हो गया, closing stock 50,000. Over. Shall we tally? No. Goodwill account. From working note 1 you calculate, working note 2 you calculated goodwill, no, 6,000. Now pray all your favorite gods and check what is the amount. Okay, this side 75,000, this side 1,10,000. No, wait. Closing stock 15 नहीं है बेटा. Congratulations, it is 50,000. Yay, balance sheet tallied. That's it. So they asked you to prepare business purchase account. We have done that. 2, they asked you to purchase P&L account. We have done that. 3, they asked you to calculate balance sheet. We have done that. The only thing you need to see, the key points you need to remember in this problem is 1. We should calculate profit for the first 3 months because I bought the business on 1st April. So first 3 months profit will be prior to my business acquisition. That will be capital profit. That should be subtracted from the business purchase account. Point number 1. Point number 2, you need to calculate goodwill. Point number 3, when you are preparing P&L balance sheet, you should consider this, out of current year profit, you should reduce the business purchase. That means the first 3 months profit, whatever is there, that you should give, business purchase account due entry. Balance profit goes to proprietor's capital account. That's all. Simple problem. So do you have any doubts in this? Are we done?